Recording in progress. My name is Richard Joe. Welcome to Trading the Markets. Today we're going to talk about market context and coming up with a trading plan. Just going to give a few minutes before I start. So, send up as much of that class live. But thank you for tapping in, whoever you are. Can you hear me all right? I don't know if you can hear me all right. Let's turn this sound. Just to block out the background noise. All right. Okay. Right. All right. Let's see. Let me just send this link out one more time and I'm gonna get started. Uh, Starting in about 1 minute. All right. There's a turn off the AC. Let me get started. All right. So you guys know, not a market advisor, everything for educational purposes, but let's talk about building market context. So when you're looking for something to trade, something to invest in, you don't want to just go right to the chart and start looking at different charts and say which one looks the best. No, no. You want to be smarter than that, right? So what you got to do, you have to build a story, you have to build a big picture, you have to build a context, you have to build themes. So you really want to ask yourself, what is the story of the stock? And what are the most important factors of that story? So let's go right into it and build context based off of this trading week, right? So based off the market, which is the S&P 500, right? It's been showing signs of exhaustion, confusion, and fear. So it's not gonna crash. It's not gonna just go down. It's just that everybody's so scared of what can happen next. So it's very fragile. It can move whiplash either way, and that's what's been going on. So the data is saying that it's neutral. The sentiment is neutral because smart money. So smart money is the big firms and institutions, but the retail, us who trade like on our phones and stuff, they call us dumb money, right? Hold on, let me put some more people in. Yeah. So yes. So and so like I was saying, thanks for joining April. The market is showing signs of exhaustion, confusion, and fear. So it's not going to crash. It's just that both both sides is confused. Both smart money and dumb money have the same level of confidence in the market, where it's like no confidence and equally uncertain and equally scared. So that makes the market very choppy, volatile, swinging a lot, and it's like any little thing can make it just turn on a dime. So just understanding that right now the market is in a fragile state and takeaway is avoid being like, oh, the market's going up now. It's just going up, it's just going up, going up. No, no, no. Or it's just gonna go down and crash, crash, crash. No, no. It's playing the in between and it's getting both sides. So another indication of fear showing up is in the options market. So right now, IWM is the Russell 2000. You know, the small caps, the small companies. And remember last week when we were talking about indexes, we said that the Russell 2000 is an indicator on whether we're risk on, whether people really want to put on risk and have things basically pushing higher and higher. So basically, because it's risk, it's that I did the small caps, they're more risky. It usually costs more to buy their options. But now it's costing more to buy. And meanwhile, because QQQ, which is the Nasdaq, which is the tech, it's usually more stable. But now the more stable one is costing you more than the riskier one. So that shows that both sides are confused right now. You know, so it's really, really unusual, and it means that traders they're willing to pay protection. So like they're willing to protect themselves from possible downside. They're willing to hedge because they basically they don't know what comes next. So instead of asking questions, they rather hedge first and ask questions later. You guys able to hear me all right? Everything's good? All right, let me continue. So so government wars, shutdowns, fears, trade war uncertainty. So these are why people are fatigued right now because all the things that's happening, you know, and also the war. But psychology, like I said, is I don't know what's coming next, so I'd rather hedge first and ask questions later. So one thing you can do right now is trade smaller size, fewer setups, and wait for confirmation. So in this environment, the trader who saves his money during the chop is the one who profits the most when the real trend comes because there's a new cycle coming. So right now, what you don't want to do is don't chase breakouts, don't buy extended candles like that have moved up really high, and don't buy the top, right? Or let's say it's went down super, super down. Don't try to sell the bottom for it to continue. Everybody in there, April, okay. Yep. So don't just sell the bottom so it can continue. So excuse me. So this environment, it favors patient traders. So right now is the time to be patient because both sides are getting thrown for a loop. So, like I was saying, theme, the market is just exhausted. And when it's exhausted, it becomes fragile. When traders lose confidence, price movements become exaggerated because people are reacting emotionally. So that's why you have violent swings, sharp reversals, and there's also faster rotation between sectors. So also remember we're talking about positioning where money is moving, where money is coming out of, and where money is going into. So remember in the market, they like hedge funds never sell, they just rotate the money around. So we got to know follow the money. So positioning is vulnerable. It's open to sudden panics. You know, a lot of these things that happen, and not even without even any news, people would just panic. So don't sell early. Ask, is this real selling or just people being emotional? You know, so because a lot of times those flushes could be excellent opportunities if the floor holds, if the support holds. It could be a really good opportunity to get into trades. Um, Yep, expect so during this time people have tighter stops, so you're gonna see a lot of institutions just trying to swing people to stop out. So the rule what you can do is never enter immediately after the breakout, wait for the retest, wait for confirmation. So if a higher low, if the lows are getting higher, that's bullish, and if the highs are getting lower, then that's bearish. So the meat and potatoes. Money's rotating. Where is money rotating? So money is leaving AI. So it's very important to be familiar with the themes of the market. You got AI, you got cloud computing, you got so many different tech themes, semiconductors, you know, the chips. But basically money is leaving AI, mega cap growth, and high momentum technology. So memory, chips, money is leaving these right now. And then instead money is going towards industrials, financials, healthcare, energy. and materials. These are what you call the real economy because this is like the stuff that the real infrastructure of of our country is made of. So, so as a SPY trader, right? I will also look for because SPY may struggle because when other tech SPY is mostly tech, so it may struggle as tech is struggling, but other sectors are going to start leading, like XLF, financials, industrials, energy, the healthcare, especially. Like look at these sectors, especially I don't know why there's like an inverse correlation between AI and healthcare, but usually when does bad, healthcare does good, and they move opposite. So it's stuff for you to watch the rotation on how things are moving. Then if these strengthen while QQ weekends, it confirms sector rotation. Yep. But also keep in mind we're in July. July is a very strong month for the market. Okay. So even though July is very strong. Don't just blindly buy everything, thinking like you gotta wait for things to confirm. But hold on, that's somebody in, and I'm gonna show you guys this too. So if you look at this chart right here, you'll see that this is the seasonal data. So based off the past 15 years, it's showing what the market's supposed to do. So the blue and purple is showing based off the past 15 years, this is what the market's supposed to do, right? And then the red is what it's done this year. So a lot of so if you look at the red compared to the blue, you'll see that it's been following it pretty decent, not perfectly, but it's been following it. So the main thing is right now we're in July, we have a strong tailwind, which means seasonally July is a great month. Look at how this goes straight up until July 5th. And then even when it pulls back, keeps going until July 23rd, July 30th. So July is a strong month. And then you can see down here that July so the green is the average return and the blues will actually happen. So in the past, you see how like we've been outperforming, but March was low performing. But now we're in July, it's supposed to be green month, it's supposed to be a strong month. So we're gonna be positioning ourselves and preparing for that, but not jumping the gun, not jumping too early. So like I was saying, so July is the strongest month of the year. Over the last 15 years, July has finished positive 93% of the time. So, and despite the market has been following pretty closely. So this improves the odds, but it doesn't guarantee we're going to go straight up. This is just a guide, but it's not a guarantee. So what you do is you use it as a guide, but you wait until you start to see it, you know? So what I was saying was even though the market may struggle, there's going to be a rotation. So expect money to come out of AI, come out of mega caps, come out of these big memory chip names, and they're going to go into industrials, financials, energy, materials. These are doing good right now. And I was saying, for some reason, AI has the opposite relationship with healthcare. So healthcare is doing good. So let me show you what I mean. Like, so right here. So let's do what is it called? Oscar OSCR. So look at Oscar, right? This and then another healthcare name. And let me take this off so it doesn't look as confusing. So look at Oscar. Look at Merck and Mark. I'll put it all on this side, on the left side. Merck, so you can see Merck broke out. What's it called? Moderna, mRNA. They broke out. What was the other one? It was, hold on, there's another one. I'm trying to remember the name of the stuff. Let me see if I go back, I could probably find it. Oscar Hims. Okay, let me show you the Hims. So Hims just broke out today. And if you know Hims and him and hers health. So look at how it broke out today and look at the room that it has to potentially keep going higher. So definitely Hims on watch. If we can get a pullback entry, definitely look at that. That's one I really like right now. So what I'm saying is, and then at this in the same breath, look at chips Look at AI. So look at MU falling off a cliff. So if you want to bet to the downside, you could probably find a good play off of shorting chips and certain AI stocks when it comes to AI hardware, the hardware side of AI. So that's why, like, before you get in the trade, you don't just look at the charts. You come up with a story, you come up with themes, you build a context, and you ask, what is the story of the stock, and what's the most important factors in that story. So if we go back, so here's what I was saying. So instead of asking, is the market bullish? Like, is the market going to keep going up? Ask, what part of the market is attracting money? Because there's always a bull market somewhere. So even when the market is going down, there's certain sectors that are always going up. You understand what I'm saying? So all you gotta do is look around to see where is the rotation. And because we learned about sectors in previous class, we understand that they rotate. We know the difference between defensives and growth and value. So right now, value and defensives are rotating into while growth is starting to rotate out of. And certain things that can help is that we have a more stable Federal Reserve, oil prices are going down, and certain things are like war might get better, we might really have an agreement. I mean, we seem to be having an agreement. So these factors they support more of a traditional high growth. So if we wait long enough, we eventually can get back into that market. So yeah, so that's the key takeaways. So based off of that, we can look at certain stocks and sectors. So like I was saying, if you're looking for things to make money off the downside, this is the sector that I would short. These sectors right here. But if I was trying to make money on the outside, tech software is actually doing good and it has a lot of room to run to the upside. So these are the sectors that I would look at. Even financials, remember on that list, financials, look at XLF. Financials. Look at financials breaking out today. Like if you caught this move today, you can make a lot of money just off of today's movement and financials, and then so understand like what you're trying to do is you're trying to make a funnel. So you start big picture. Okay, what is the story of the market? Okay, what industry? What's so then that story? What industries and sectors does it affect? All right. So within the industry, within the sector, what stocks are within that sector that I can trade? Because so the beauty is you can trade the whole sector like XLF, or you can go in and be like, you know what, let me trade Bank of America. You gotta break out or Wells Fargo. All right, Wells Fargo had a nice breakout today. I did see this today, but I didn't get into this today. But I did have my alert did go off when it broke this today. And then you have your big banks. You got Goldman Sachs. But notice that big banks didn't perform as well. What's the other one? That's Morgan Stanley. Let's see how they did. So notice that big banks is not leading. Now it's the middle banks that's leading the big banks. So you see, even within the sector, it's still a separation where you can focus in on, okay, what is the best expression of this idea? And that's what you're trying to do when you trade. You're trying to have a story that you're following and you're connecting all the dots and you're finding the best instrument to use. So yeah, so that's a trade right there. Another thing I've been watching is the dollar. So this is the dollar. It looks like the dollar might go back up. So a lot of times when the dollar comes down, markets tend to do better. But we just watch it. But also certain things have relationships like the dollar and gold. Like you see, I said healthcare and AI. So then you have a relationship with gold. So I put gold on the left. So notice, and then I'll give you April, right? So I'll do April, right? So since April, you see how they've been moving, but you see March from here, the dollar went down as gold was going up, and then right here, right? So right here, May. So sometimes they do go up together sometimes, but a lot of times they have an opposite relationship. But overall, you see that this is going up and then gold is going down. So they have an opposite relationship. So if you know that, you can use one to trade the other. All right, and let me know if you guys have any questions, okay? So yeah, so this right here is all the sectors. So I can go through the sectors and you can see um real estate was up, consumer staples was up, healthcare was up, energy is down today, materials were up, industrials were down, financials are up, consumer discretionary was up, technology was down, and communications were up, interestingly. So you see a lot of um defensives and values are up. Let me look at some of these charts too. So the real estate, even though it's going down, it still was up today. Materials, that was up today. Healthcare still finished up today. But look at energy. And mind you, it's probably has a lot to do with oil going down, but energy is falling off a cliff. Because if you look at US oil, so this is US oil, it's falling off a cliff. And as it breaks this black line, which is the moving average, it could really fall. Because remember, back in February, we were trading between 80 and 76. Or even if you go back, we were at 60. So we can really come all the way back down. And that's the thing, like in the market, quick move, big move is usually unhealthy. And eventually when comes back down, it comes back just as hard. So this can come back just as hard. So, so remember, I should probably make a class about correlation. So what moves opposite of oil? Guess what? Airlines move opposite of oil. So look at American Airline. There's American Airline. Let me not even have the lines and stuff just so you can just see it. Because you can just see it. It's not that complicated. But look, on 26, you see it started coming down. You see when it started coming down, what happened? This started coming up. And then when this started coming down, look at you see, um, right there, that's June 11th. As oil was coming down, what happened to airlines? See what I'm saying? So this is a big help when you're trading because if you know the direction of one, you can wait and find a good entry on the other. So now the question is, where's airlines going? Well, the next target is up here from the past. So if I and airlines, American Airlines, one of my favorite options to trade. Let's do it like this. Let's do it like this. Actually, I could have just let me just do this. I'll leave it how it is and then just make it full screen. Boom. Yes, so you can see American Airlines, next target is $19. Right now what you see this gap, like we're basically in this filling this gap, and the next test is gonna be $19 for us to try to reach. So then if I really look back, we see that this was even at 1915, and then all the way back in 2022, we're at 21. So we're at a level where if we start to break these levels, we might get back to some of these old levels. And these are basically so you look to the left, you look at old levels as targets that it can reach if it goes up. Same way if it goes back down, that $16, that was the old high that it might go back and retest. So that's something to consider too. All right. Um, you guys have any questions?
No, no question.
You do?
No, I don't have any questions. Thank you.
Okay. All right. Well, thanks for tapping in again. Been a while, April.
Yes. Thank you so
Yeah.
much. Appreciate it.
Yeah. So much has happened in the market, especially under Trump. It's been giving a lot of opportunities.
Well, I'm definitely ready trying to get back,
Mhm.
back in the game.
And right, and a stock that's been doing really well too is so I said healthcare is kind of so as they're taking money out of AI, more money is going to healthcare. I don't know why they move so opposite, but it just does. So what's the name of that stock? This stock right here, IBRX. So IBRX. So like I got in at 657 right now. It finished the day at 917. So was it IBRX? IBRX. Yeah, so this stock right here. So this stock right here. So the market's all about levels. Remember I said floors and ceilings. So if you notice, I'm gonna draw a little bit. This was the floor, right? Like you can just see this without even like looking too hard. And let me make this a little bit more transparent. All right. So this was the floor, and this was the ceiling, right? Notice that price, you see how price was staying in that range? So remember, the market, all it does is move from one range to another, both to the upside and downside. Because there's ranges inside of ranges too. Like even inside of here, there's a range, like let me draw a line. Even right here, there's a range, between even between like if I was to clone this, between the red lines of the range. So, but the point is, once we break the top of a range and we have strength, we can keep going. So, like right here, when it broke up here, it kept going, but then it hit resistance, right? Resistance is the ceiling. So now right here, since it's breaking out, where's the next ceiling? Up here. But let me clone this, and I'll make this skinnier too. This is the next ceiling up here. You know what I mean? That's the next ceiling up there. So if we break through there, the next ceiling is really all the way up here. That's really like the next ceiling. And then after that, the next high would be the last ceiling. So this stock has a good potential to really run because it's a biotech, it's a health technology pharmaceutical. And just from this entry with the 144 shares of about $400 on these shares. So really pick your battles, pick your focus and just focus on that. But here's one. If you guys were interested, this is still good for you to try to get in on little by little without, because this right here could become the new floor. So notice that the ceiling can become the new floor. All right. Any questions? Anything you guys want me to look at? Or anything you guys want me to look at? Any stocks? Any ideas?
Mm, not that I can think of.
Nothing you can think of? Okay. Then that's it for tonight then. I don't really have nothing else to go over.
Thank you. That was good.
No problem. I'll drop the recording. Um, someone just came in. Hold on. Let me not end it yet. What's up, Chris? What's going on?
Good, and you?
Doing great, doing great. We're going over themes, and right now, I think I was talking about it a little bit earlier, how leadership might be changing. They might be rotating out of AI hardware and rotating more into real economy stocks, like a lot of value and a lot of defensives, like healthcare. So for some reason, I don't know why, but AI and healthcare be having like an opposite relationship. So like certain like Moderna mRNA broke out, like a lot of healthcare broke out, mRNA, Merck, and then like it was what's the other one called? OSCR. So a lot of healthcare has been breaking out. And oh yeah, and then yeah, I was showing, so I was going over that stock IBRX. This is a stock I had gotten into, IBRX, and got it at 657. It's at 917, but the chart looks really good, up about 40% on it. IBRX, IBRX. And yeah, I was just saying like, it broke the ceiling and now it's trying to retest to potentially go higher. So that's just themes. But the market is basically fragile right now because both sides, both smart money and dumb money are confused and they're more afraid. So they're hedging out of fear and they're reacting more emotionally. So it's causing a lot of whipsaws in the market. So like so you see like MU had a really big, dump today and could potentially keep going further as money rotates out of these type of stocks. You got any thoughts?
I just pulled up IBRX that you mentioned. So I
Yeah.
guess I must have been looking at that a long time ago. I had some
Yeah.
alerts on here, but I mean the chart, chart actually looks doesn't look bad on the day
Hmm.
chart. It's swing low and it kind of looks like I don't know if I can call that a double bottom. It's like a multiple bottom. It's
Yeah,
like kind
multiple
of three
bottoms.
three
Yeah.
touches. So it's kind of like it formed a demand buy zone at the bottom and then it
Yeah.
ventured out into like a fair value gap, a bullish fair value gap on the day.
Hmm.
So I mean that still looks pretty good.
Yeah. So trying to
You know,
see,
like
see,
11
see.
and 12, 42. You
Hmm.
still in that?
Yeah. Yeah. It's like I got but shares, like you see them right here,
Okay.
144 shares of about 390.
Yeah.
$400. Yeah. So
Okay.
just holding these shares, just gonna
Yeah, that
hold
looks
them.
pretty good, man. Pretty good. And
Hmm.
then you mentioned about healthcare. Yeah, it's been doing
Yep.
uh it's doing some things like Lilly. When was that? I mean, I've been eating
Lily.
off Lilly for
Yeah.
a minute, but it
Lily.
dumped today.
Okay. Okay.
Um,
But that what day was that? Friday was a huge
when
breakout day.
when was that? Was that Friday? Last
Friday.
Friday
Yep.
or last
Friday that
week?
just
Okay.
passed. Yeah, last week. Hmm.
Yeah, yeah, that's
Oh.
when I got that like 2000 some percent on it. But
Oh yeah. Yeah. That
yeah,
was crazy. That
yeah,
was
and
crazy.
I called that the morning that because I got in at 75 was my average, and I had two of them, so I sold one earlier, and then I held on to that other one, sold it at like 2000. So I mean, the highest it went was like 3000,
Wow. In one
and
day.
yeah, and I just saw it in the morning. Usually I don't even like I
It was.
stopped getting into stocks right in the morning like that.
Hmm.
Um,
But
I usually
certain
kind of
stocks run off open or within a couple of minutes of open. Certain stocks do run.
Yeah,
But
I try to
yeah.
wait that 15, 30 minutes, but
So
sometimes,
so what made you enter this? Like, did you enter like once it broke previous day high or like what was your signal?
well, actually, I mean, I already know how Lily moves anyway, so I was like looking at something else, and then another group I'm in, I think somebody mentioned it or something. I think,
Hmm.
and then I took a look at it, and then it kept it caught my eye, and I just kept looking at it, and I saw just the way it was moving. I was like, let me just go ahead and then I started going to the option tree and pinpointing what strikes looks good versus
Hmm.
open interest and volume and found the one that I found and that thing just kept going
Yeah,
and then
yeah, I'm
I
moving
chart the
right off
contract
open.
so I try to chart the contract before I get in but if I like how the regular chart's looking then I'll go
Hmm.
ahead and get in and then chart it but that chart in the contract is a game changer.
Oh yeah, that's what I do. That's how I've been doing my strategy with the SPY with the limit orders, just based off of levels from charting the contract.
Yeah, and that's what I was doing on Webull. I got to get back to Webull for my
Yeah,
SPX because on there it had lets you chart the contract but on Robinhood it doesn't do that so
yeah.
when I'm
But
on
this
Robinhood, then I
thing,
just use TradingView to chart it, the contract.
yeah, this thing ran straight off open, and mind you, wasn't there a big sell off on Friday
Oh,
in the morning?
oh, wait. What did you just ask? Was there what?
I think was there a sell off in SPY like the regular market
Yeah,
on
yeah. Lily
Friday?
typically runs counter SPY.
Mm,
But
okay,
you know what it
okay.
was? You know what it was? I'm gonna tell you. I think somebody
Mm,
might have said something about it, and I looked over. But that's one of the ones I usually keep like my eyes on alerts on. But there was news that dropped. I think I might have put that in the chat. I think that news. It was some news that came out
mm.
I mean, it wasn't like widespread, but it was like Thursday, Wednesday, Thursday, I think. So that made me have my eye on Lily even more than I typically have it on. Because
Mm,
I can't even think. Well, I have to look back at some stuff to see what the news was, but because
yeah.
they're supposed to be there was something that came out I don't know, maybe a day or so ago, was mentioned about like something with the peptides as far as something about
Peptides.
something wasn't approved or something, but
Mm,
that really just had to do with like compounding. So the other day, meaning that they can't like companies can't go out and compound that like Rita and stuff like that. That was that GLP-1s, which the fat
okay.
loss, and then they also help lower your blood pressure, and then they get your glucose.
Okay. Oh,
So it's basically whoever gets the like final. So like once
I,
it's approved fully with FDA, then like other
mm,
companies aren't going to be able to like make a they won't be able to make like the off-brand stuff of that.
okay, okay. Well,
Because
here's what
Lilly
I want
had
to ask you about, Chris,
yeah.
because
Mhm.
this is a stock I see you trade all the time. That just broke out today. That's healthcare. Damn, all right. There you go. Hims.
Yeah, that's another one I need to keep my eye on because
Mm-hmm.
they deal in those GLP-1s too. Um,
Mm-hmm.
and that's been breaking out because I had my eyes on that for a minute because I remember I was trading that
Yep,
and then I
yep. I
stopped looking
remember.
at it, but now it's breaking out. July is supposed to be a big
Strong
month
month
for yeah for
for biotech too.
well I
For
mean the
healthcare.
GLP-1s. So like Lilly, yeah, the
Okay.
GLP anything. So that would be like Hims,
Mm-hmm.
Lilly, and what's the other one? Nova.
Nova.
Yeah.
What's the ticker on that
Be,
one?
because especially with the Rita, like that may get to a point, and then also the news that came out was something to do with Medicare. It was saying
Mm-hmm.
that Medicare you're allowed to get that start getting the GLP-1s through Medicare. So I think that was the news that happened like last Wednesday or Thursday.
Okay, okay. I'm
So
gonna watch this with definitely
yeah,
watch him with you. Yeah.
but that chart looks good for him. I mean, what is that day chart?
Yep. Day chart.
Yeah.
Nice quick clean break. Clean
What's the
gap
high
up.
on that? Like the all time high?
All time high.
Yeah.
Like from here, is it? Yeah, from
What is it? 70?
72, 50, 73.
Okay. Yeah, yeah. That what is that? What is that? Is that
72.90.
200 MA?
Yeah, 200 MA.
Yeah, yeah. Hims is definitely all of them. Like I said, Hims, Lilly, and Nova. I don't really trade Nova too much, but I know the GLP-1 too.
Hmm.
So
So
any of those three, yeah.
this is gonna end in less than a minute. But this is I'm not gonna go come back in for tonight, but definitely appreciate you coming in and giving me your feedback, and I'm gonna drop this recording too.
All right, that's cool.
Yeah, thanks for tapping in, everybody. Have a
No
good
problem.
night.
All right, you
Peace.
too. Man.